Dr. Babasaheb Ambedkar Open University.
Hello. Now we are moving to the third part of the introduction of accounting. As the introduction of accounting, we discussed already many points. Here now we are going to discuss the advantages of accounting. Plenty of advantages of accounting are there. The basic advantages of accounting is this would be showing all the transactions systematically recorded in the books of accounts. It means that whenever you wanted to see and whenever you wanted to observe the system of accounting, you can easily observe because of it would be in your hand at the time of whenever you need and whenever you require. So this would be a biggest advantages of accounting. Now let's one by one we discuss the advantages of accounting. Start with the first advantages, that is helpful in management of a business. It would be helpful to the management needs a lot of information for the efficient running of the business, and all such informations is provided by accounting, which helps to the management to understand required manners. Second is helpful in planning. Planning is a very important part in a business, and the planning you can do it if there are some informations and some historical data if you have in your hand. So management would like to know whether the sales are increasing or decreasing, whether the profit is increasing or decreasing, whether the purchase of a product at a higher price or it is actually purchasing at the reasonable price, and the company is borrowing money from the bankers, or if they have enough amount of working capital in the business. All these informations would be helpful for a management to have a systematic planning for efficient business. So helpful for planning only in case of if there is a systematic records in the books of accounts. The next is helpful on decision making. At times the management has to take a number of decisions many times. For example, the company has to take a decisions whether the price of product, sales price of the product is reasonable or not. So now the company willing to know that their product is comparatively higher price as compared to the other product, or maybe they have a huge amount of sales, they have a scarcity of the there are a scarcity of the product in the market. Then the company willing to identify that whether the product raw material has been actually purchased from the plenty of options. So need to identify from which options they can purchase the raw materials. So all these things, the decisions can be taken from the accounting information. So accounting provides all the informations required for making such important decisions also. Helpful in controlling. Management would like to see that the cost incurred is reasonable and the no department is overspending. Accounting provides such type of informations to the management whether the controlling of the cost is possible or not. So in this regard, if the cost is actually beyond your imaginations and beyond your capacity, the immediately accounting informations would be identified and informed to the management. Here there are some important things to be considered to control the cost also. Next is provides complete and systematic records. Business transactions have given and the informations for the business entrepreneur or the owners of the business to identify a grown in size and complexity, and it is not possible to remember each and every transaction. So now accounting keeps to prompt and systematic record of all the transactions and summarizes them in order to provide a true picture of all the activities regarding the business entry. Next is information regarding the profit or loss. This is a very much important advantage. Accounting reports the net results of the business activity of an accounting period or a stipulated time or a particular period. The profit or loss account prepared at the end of each year, or maybe at the end of each stipulated period, maybe every quarter also, maybe half year also, or maybe at the end of the year also. And this profit and loss account shows the picture of a net profit earned or a loss suffered during that particular period. So the information regarding the profit is of a great use to the owners and various other interested parties. Next advantage is information regarding the financial positions. It is a very much important because of accounting reports is identified the financial positions of a business at a particular time. At that point of time, balance sheet would reflect the what amount of business situations or financial situations at that point of time, whether they have enough amount of capital in the business, or maybe they have a more amount of a debt in the business from the financial institutions or from the bankers, what amount of assets they are carried in the business, how much amount of current assets they are having in the business, what amount of liabilities are carried in the business. Ultimately, the financial positions can be identified through the accounting records. Next is enables comparative study. By systematic record, accounting helps the owners to compare 1 year's accounting informations or data with the past year's accounting data, as well as they can compare their costing also. If they wanted to compare their accounts with the same type of other business also, they can compare also if they will identify it, and they will get an information from the other companies or other traders also. In this way, the easily comparison can be possible if they have an accounting information in their hand. Next is helpful in assessment of a tax liability. Company is willing to identify how much amount of tax liability has been incurred during the year. They wanted to know that the part of the firm is assets to income tax or a sales tax, and how much amount of tax liability is about to pay in the particular year. Such records, when audited, are trusted by the taxation authority and would be identified to assess of your tax liability also. Evidence in legal matters. Properly maintained accounts supported by the authenticated documents are accepted by the court as a firm evidence. So in that sense, the firm can represent their evidence if they have a systematic books of records and books of accounts and represent at the time of it is required. Facilitate the sale of a business. If a business is being sold, the accounting informations can be utilized to determine the proper purchase price. So at some period of time, if the owner or a businessman is willing to sell their business, if they prepared accounts, if they maintained their accounts systematically, it would be easily identified what would be the accurate purchase price for the selling of that business. Next is helpful in raising a loans. Whenever the company willing to raise their loans, and then whenever they ask for the financial assistance from the banks and financial institutions, if they have a systematic books of accounts, they can represent their systematic accounts in front of banks and financial institutions, and the bank and financial institutions can observe their accounts, and from that they can find out the what amount of fund can be offered to the businessman. In such a way, final accounts, fund flow and cash flow statements can be represented and identified to raise their further financial assistance in the future. Next is helpful in preventions and detections of errors and frauds. This would be a very much important concern so far as the advantages is concerned. Properly maintained accounts is always helpful prevention and detections of errors and frauds in the business entity. So if there would be any fraud or errors, in that case, account audit, once the account has been returned and then audited the accounts, it would be easily identified where the errors are occurred and where the frauds has been comes into the existence. So errors and frauds can be reduced when systematic accounts are prepared. So this is what all about the advantages of accounting. Now moving to the next point, that is limitations of accounting. There are many limitations also so far as accounting is concerned. However, accounting has a certain limitations which must be kept in mind while using such informations, and influenced by the personal judgment. Suppose accounting is as yet an exact science. An account has to exercise his personal judgment in respect of a various items. For an example, it is very much difficult to predict with any degree of accuracy an actual useful life of an asset which is needed for calculating a depreciation. So in case if you have a building and some persons is actually charging a depreciation on a building or on a machinery at a certain percentage, which would be maybe perception of their mind, may not be accurate or may not be correct, or the other person have some other type of ideology to charge a depreciation on that assets, may be differ, cannot be accurate or cannot be identified also. So this is a limitations when it would be actually moved on the basis of influence by the personal judgment. Based on accounting concepts and conventions, accounts are prepared on the basis of a number of accounting concepts and conventions. Hence, the profitability and the financial position disclosed by it may not be realistic sometime. For an example, fixed assets are shown in the balance sheet according to the going concern concept. This means that the fixed assets are shown at their cost and not to their market value. The value realized on their sale may be more or less than the value actually stated in the balance sheet. So sometimes the balance sheet value of a particular land and building or a plant and machinery was not as the same value which was actually in the business. That means sometimes accounting concepts and conventions, due to accounting concepts and conventions, maybe the accounting records may not be correct, or maybe sometimes it happens the person who does not have a knowledge of concepts and conventions and he would be record the books of accounts may not be correct also. Next is incomplete informations. Accounting statement provides only the incomplete informations because the actual profit or loss of a business can be known only when the business is closed down. So sometimes it actually shows the incomplete informations at that point of time. Omissions of qualitative informations. Qualitative information means the very much important informations regarding the accounting disclosure. So sometimes when the people are recording an accounts, along with that entry, some disclosures are also necessary along with that accounting entry. Like the investments are recorded in the books of accounts, but simultaneously they need to mention along with the investments whether it is recorded as a face value or recorded as a market value or recorded as a purchase price. What amount of interest rate has been actually received, interest to be received on the particular investments, also necessary to mention along with the investments. So omission of the such qualitative informations may be also harmful to record the books of accounts. Next is based on a historical costs. Accounts are prepared on the basis of a historical cost, that is original cost, and as such the figures given in the financial statements do not show the effect of changes in the price level. So on the basis of historical cost, sometimes it would actually create an issues. Next is affected by a window dressing. Window dressing refers to the practice of manipulating accounts so that the financial statement may disclose a more favorable positions than the actual position. For example, the purchase made at the end of the year may not be recorded or the closing stock may be overvalued. So in that sense, the correct decisions cannot be taken on the basis of such financial statements. This is what all about the limitations of accounting. The other point is types of accounting information system or accounting as an information system. The accounting information system may be divided into many parts. First is case subsystems. This case subsystem deals with the only case transactions and prepare the receipt and payment account, and only cash and bank transactions would be reflect on the cash subsystem. The next is sales and accounts receivable subsystem. Through this system, the company or businessman may be willing to know that what amount of sales has been incurred in the business through the sales ledger and the fund transfer. It generates the periodic informations about the sales, collection from account receivables and overdue accounts, and the positions of the receivables also. Next is purchase and account payable subsystem. This actually system is related to the information has been provided of a creditor's status as well as the what amount of payment has been made to the creditors of a credit purchase. The next is inventory accounting subsystem. Through this system, the company is willing to know the what amount of purchasing is actually in the business and changes of their inventory and how much amount of issues of various items for the particular requirement on the particular date and quantity and prices. So inventory accounting subsystems would be actually showing the positions of inventory in the business during the particular period. Sorry. Fixed assets accounting subsystem. This system would be actually reflect the what amount of changes made of your fixed assets in the business like a plant and machinery, furniture, building and other assets, and what amount of additions made during the year, if you have a selling during the year, and the net positions of the particular business. So the next is costing subsystem. This subsystem deal with the ascertaining of the cost of goods produced and the what amount of cost has been incurred in the particular business. Budget subsystem, it shows the budgetary informations and its comparisons with the actual performance are a key output of this particular system. Tax accounting subsystem, this shows the system of concern with the computation of income tax, sales tax and other various taxes for the business of basis of accounting. And management information system, this system deal with the sales and account receivables subsystems and other all different subsystems like a tax accounting systems and the other systems of controlling a management as well as the taking important part of a decision making for the business. This is what all about of management information system called MIS. So this is what all about the third part of accounting introduction.
Dr. Baba Sahib Ambedkar Open University.